So we won't talk.
Well, I'm gonna clip it anyway, but I'm gonna start letting these people in.
Okay.
How do I do that? If it all, there we go.
Oh, you know what?
We got 7.
Oh, that's good. Better than nothing. Everybody's online now too, right?
Yeah, nobody's seeing why I can't see everybody. Oh, great, okay.
Oh, wow, there's people on.
All right, okay.
And
Shut the door and.
Yeah.
Shut the door.
Well, then there's no one in here. Even with that screen. Yeah.
And I can, if you want, we don't have to record this room, we can just record your voice. That, cause then, unless you wanna see where you're standing.
Yeah.
Hi, guys, just give me a sec. We're doing logistics here. Hello, Jennifer. So
Hi.
I can record it like this, or I can take your picture off. It's totally up to you.
What do you think? What do normal people do?
People usually have, like, they don't care, they just rock and roll with it, so.
Okay, because they can see my slides.
Yep, they
Okay,
can see your
that's fine.
slides, that's
Yeah.
100%. It's
Okay.
just the recording will have that little thingy there.
Yeah, that's fine.
All right, so let me get the real glasses on.
Okay.
So hi, guys. Here we are.
Good morning.
Welcome to the Small Business Center. I'm going to do a land acknowledgement, and just to let you know, some little housekeeping. I am recording this so we can put it on our YouTube channel going forward. Stephanie's graciously given us the permission to do so. So then you can review it again or share it with your peeps. And also, there will be a workshop recap, which Stephanie, again, being gracious, is going to let me send her slide presentation. So you'll get the slide presentation and the YouTube channel link. Okay, oops, I'm gonna admit somebody, hang on. Dooby. This is a remote mouse, so he's likes to jump. All right, so let's get started. Good morning, and thank you for being here. We're at the Belleville Small Business Center, located on the Loyalist College campus. We're in the Pioneer Building. If you guys want to pop by and have any one-on-one counseling, if you're a small business owner, you're more than welcome to give us a call. But today we're here to talk with Stephanie MacLauchlan
Stickler.
I love that.
They stick.
Kyle MacLauchlan, one of my favorite movie stars. Anyway, Stephanie MacLauchlan Stickler, who is the owner of Stateside Tax Solutions. So here, I'm just gonna do a land acknowledgement and then we'll get started. You guys know how to play nice on Zoom. I know you've done it for whatever years. Stephanie would also like to invite you to just chime in, whether it's chat or unmute yourself and just say, what did you mean by, or whatever. This is an engaging opportunity. She's here, you're here, so let's get to it. We acknowledge the land on which we gather in this traditional territory of the Adanasi and the Anishinaabe and the Huron-Wendat.
Okay, then I think it's the right decision. No, but then we will actually give you.
Did I say it wrong?
So my
Oh, I'm just going to continue. Can you just?
lawyer, he's like, I've discussed it with our accountants, the spirit of the SBA is to remove the excess cash from the monetary account. This is a brand new term.
All right, we're muting that one. I'm sorry, let me start now. I won't start again. Small Business Center and our managing partner, Trendval, we respectfully acknowledge the generations of people who have taken care of this land for the thousands of years before us. We respect and honor the First Peoples for their continued stewardship, and we are grateful for this land that allows us to remain sustainable and thriving. Our commitment is to learn more and share the knowledge and continue to work together, caring for this land, air, and the water that we share today and in our future. Thank you. So here we are with Stephanie MacLauchlan Stickler, owner of Stateside Tax Solutions, to find out what you need to know about your U.S. taxes, because today's the day and the deadline's approaching. So here we are, and welcome. Thank you.
So to hit the slides, I just hit.
You
Yeah.
can hit the little arrow there.
Oh, okay,
If
perfect.
you want,
Yeah,
yeah.
okay. So I
Yeah, sure.
guess before we even start, obviously everyone on this session has some form of maybe they want to understand a little more about US taxes. And as we go through, as she said, we do want, if you have any questions, do not hesitate, because I just don't want to do death by PowerPoint and go through this. And at the end you go, I had a question on the, third slide that you are completely in a different subject matter, because honestly, there's a lot of different areas of US taxes that affect people either in Canada, because we're dealing with US citizens that live in Canada, or Canadians that work in the US or have US property. So, but do not hesitate to, I don't know, through unmuting yourselves, maybe interrupt and say, I have a question, because I don't want to just go, we'll have questions at the end, of course, but I don't want to just go through all the slides and not have any back and forth. So, but we will start. You good?
Yeah,
Are
I'm
you
just
letting
gonna
somebody
admit
in?
someone in.
Okay.
I probably won't
Oh,
let
yeah, that's right. So that
anybody else in,
Well, that-
because we're kind of starting late anyway, so so everybody that showed up is
is in.
respectful of
it.
yeah, okay.
All right.
All right,
Perfect.
let's go. Sorry.
Okay. So basically, I'm actually from Belleville, Ontario, small town. Ended up moving to the US for university, went to University of Delaware, met my husband, became a CPA in Delaware, and was not planning on moving back to Canada, but my whole family's here. So moved back to Belleville and did a side gig of, I'll do a little bit of US taxes. And this has grown massively because there is, in 2009, FACTA was put in, which is foreign, you can go through and look it up, but it is all about bank accounts and offshore accounts. And this is the fear-based deal of the IRS that you must comply, and Americans love to throw their money offshore, and American citizens that are in Canada get hit with this because their Canadians are in a foreign bank account, which is a Canadian bank account. So that's kind of how US citizens are getting captured, because of offshore accounts. So we'll go through, and if anybody, like we said, had any questions, then go ahead. So I'm gonna hit the thing, or hit this. Go to the next, okay, good. Okay, so we will hit, like I said, I'm not gonna, but US citizens, US estate taxes, I will do a little bit. If somebody wants to say, yeah, I want to touch that, I will. US citizens selling US property, huge thing that occurs a lot. And then citizens, we are very close in Belleville to the border. A lot of people, you got traveling nurses, you got doctors that go and work in New York, you got people that work in factories. They go from Kingston over to Watertown and work. Okay, so a lot of people, or people fly out and they work in the US. So we'll go. US citizens is there's 1 million Americans that live in Canada. Some of them are accidental Americans, I call them. They are Americans that were maybe born and never really lived in the US, but they're still US citizens. A lot of people that call me and they're like, I think I might be a US citizen. I'm like, you think you might be a US citizen? Well, what does your passport say? And if it says you were born in Miami, Florida, you're an American citizen. Okay, so, and guess what? The border services people see that. They know that when you go over the border, they can see on your passport where you were born. And they have asked clients, so did you file your US return? And people call me from Pearson Airport and say, I just told the guy I did, I lied. I'm calling you now. We're going to do this now, finally, because they're aware they need to do it, but they just did not do it. So there's no such thing, and I won't go through technicalities, but there's no such thing as double taxation. Canada is not a tax haven. We are highly taxed. So American citizens filing a US return, if they have all their money and they earn everything in Canada, they still have to file a return. US is based on citizenship. Canada, if you're a Canadian, you cut ties with the US and go move to Florida for the rest of your life, or Costa Rica, and you have zero Canadian income, you do not file a Canadian tax return. However, Americans have to file a tax return, whether they're in the UK, Costa Rica, they have to file on worldwide income. Regardless,
Wow.
it's based on citizenship. One of the only countries that does this, yes. They follow you wherever you reside, and there is people moving all over the world, right?
Of course.
So yeah, so you don't have to file if you're less than 13,000, because that's the standard deduction. That's a lot of times for children, you know, if they don't have high income earners. So other big thing I'm gonna hit next. CRA talks, as I said in the beginning, since 2009. CRA shares information. People were not very happy about this. CRA shares information with the IRS. This is through FACTA. So my husband moved to Belleville, Ontario from Delaware in 2002. FACTA was not in place. So we opened bank accounts. There was no questions. He's an American citizen. If today he goes to RBC, opens a bank account, they will ask, are you an American citizen? If you are an American citizen, they report that to CRA. CRA then reports that to the IRS.
Wow.
Yeah, so there's sharing of information, and this is money laundering. This is, you know, all kinds of different situations why they're doing this. And it really has to do with a lot of Americans had offshore accounts, or they had $12 million in a Swiss bank account and nothing on a 1040 tax return. So they're like, how is this occurring? So they're able to find out where is money flowing, because, and not every country will share information. And that's why some people are mad that CRA signed up for this, but Canada did agree to share information. So, and I have people, clients that come to me that are American, and they're like, I don't want to do this. I don't want Trump to look at my bank accounts. And I can assure you, no one is really, this information just goes to Department of Treasury in Michigan. And I'm not sure how many people are looking at it, but you're probably good. So this form must be filed. And the big thing about the IRS is penalties. Okay. So you cannot file it. I will not file these after October 15th. There's a $10,000 penalty that they can assess if you file it after that point. So Americans living up here, I do a ton of these returns. Okay. They have to report every bank, every investment account if they have over $10,000. So if they have one RSP account that is $12,000 and a bank account at $10, they report every account, regardless if they start to have one threshold of $10,000. So does anybody have any questions? I'm going fast. I know. Any
It's
questions?
exciting.
Yeah, it's exciting.
She's not passionate at all, right? Can I have a thumbs up here for passion, like anybody?
For tax information.
Taxation.
Tax. So, okay, we'll keep going if nobody has any questions. I'm not gonna go in depth on these disclosures because honestly, they are US citizen disclosures. So US citizens living in Canada, these forms, not necessarily relevant for Americans living in America. When I did taxes in Wilmington, Delaware, where Biden is from, that's where I used to work. We did not have to do a lot of these disclosures because a lot of Americans living in America don't have a ton of foreign investment. However, if an American lives in Canada, they opened a Canadian corporation, they have foreign investment. To the US, that's foreign. Canada is foreign. So I'm just trying to, so these are different things. There is some things that Americans living in Canada cannot invest in very easily, or it is complications for tax purposes. And that's all I'm providing here is just corporations, how you invest, and trusts are an issue. And I'm not going to really go any further than that because it is very, very, very complex. So this is the other part. What works in Canada does not work for US citizens. TFSAs are tax-free in Canada. Americans have to include that income on their US return. It's not a no-go for Americans to invest in TFSAs. I include the income on their US return. And I really think at times the benefit of not paying tax to Canada outweighs the tax you would pay to the US. So it's kind of, you have to weigh and how much you earn, and you just got to work with it. And it's something you have to monitor for Americans. Incorporation, I'll give you a little on this because honestly, this becomes more complex. I got people call me and they're like, oh, I need to do my US return. I've never done it. I'm really easy. And they're like, but I have all these investments. I have a corporation. I said, you just became not easy. Okay. Everybody wants to be easy because they want their fee to be really, really low. So, professional corps, if you're incorporated, I'll give you an example. quite a few doctors love to incorporate, obviously, to keep money in for retained earnings. However, a doctor, if you own more than 50% of a corporation and you're an American citizen, you then have a controlled foreign corp. Very bad. There's a lot of double taxation in this type of form. So a lot of times if I have an incorporation of a US citizen and it's not like a doctor or professional corp that makes the doctor have a whole ownership, I can make it where the wife that's Canadian has a more controlling ownership. So we do look at this, and there is times I've had clients change their ownership percentage on their corporation. I have some Americans that are so intense about this, they don't own anything, and they're like, I'm a little scared. What if my wife does something because I have owned nothing on paper because they're Americans? You do not have to do that. But you do have to be aware of the intricacies of being an American and living in Canada. And I don't know if anybody has any, you can unmute yourself if you have any questions related to that, but that's kind of just high level. Just being aware, I guess, that incorporation and percentage of ownership, controlling foreign corps, pretty bad for Americans living in Canada. Anything on that? All good? Okay.
I guess I have a question.
Okay.
Because I don't know. So I'm an American with a permanent resident status. And I've had a couple of people, big air quotes, help me with my American taxes.
Okay.
So I guess my question is like, so you've already brought up stuff that they never asked me.
Right.
That's why you're here.
Yeah.
Yeah.
You're getting
So
the
now
real-
I'm realizing that there's a bigger chunk of I don't know, but I don't know. And you said something about not filing something after October 15th, because now I'm worried that, because I've been here 15 years, now I'm kind of worried that all the ones that I've had done since I arrived here could be wrong.
Are you doing them yourself?
No, I've had a variety of different
Variety.
of different accountants, and I know one did it wrong because I heard back.
From
But
the
now I'm
IRS.
concerned that the others were.
I don't want to give this, I will say this. And I was just at courses in Toronto this week. The IRS does not audit to the extent of CRA. We all know CRA is constantly reviewing stuff. You have to understand the US is a lot bigger than Canada. They have they're not big. They're not big government either. Okay.
Yeah.
So
Well, I'm not
yeah.
making lots of, I would not consider that I'm making lots of money.
Right.
Because I work as a nurse. So I have, and what I'm also really considering is that I'll be 64 this year. So now I'm looking at getting ready to start bringing in, but I now have retirement accounts in both the US and now Canada.
Okay, and that's and that's fine, Really, your FBAR, you're saying October 15th was my FBAR. That is the last, October 15th is also the last day you can extend a US return. A US return for an American as yourself living in Canada is June 15th, but I can extend till October.
Okay.
Okay.
Sounds
But
like I'm gonna need an appointment with you.
yeah, okay. So maybe you talk to me offline. Very
Yeah.
good. Okay.
Okay.
And we'll get that sorted. Yeah. So I'm not gonna actually go on estate exemptions very much. However, I do get this call. The only thing I'm gonna go into, because Americans, honestly, the exemption level right now is 13 million. Okay. 13 million American. That's a massive, that hits, I don't know the percentage of people that have 13 million, one person, that's a lot of money. Okay. A lot of money. However, Canadians that own 60,000 of property, which I'm telling you right now, how many people have $100,000 little condo in Florida is very extensive here in this area. They can get pulled into estate taxes if they own 60K. However, you can transfer. I always recommend this. Transfer it to whoever, your kids, before you know you're dying, to avoid any probate of that property that's 100K in Florida. Do not get pulled into the estate tax. And this exemption is possibly going down in 2025 to about 5 million. That's projected right now. So some people can, I've had people call me in this area. I have 5 million, I'm gonna go buy a property in the US, I'm really scared about the estate tax. So it is something to be aware of. Make sure you're moving. A lot of people are definitely moving stuff before they pass away to whoever, their kids or whatever. Just transferring it on death is just an easy way to take care of that and not have exposure to estate taxes upon death if you're a Canadian owning property in the US. You have to understand all these rules. For an American, it's 13 million, but for a Canadian, it's 60K. They can have a problem. So that's just something to be aware of. If nobody has any questions on that, I'm not going to go further because estate taxes is very complex. It's very lawyers and.
Well, it's like you said, lottery winnings or whatever. And if
Right.
the CRA doesn't have the fine tooth comb like
Right.
we do, then it's like, but on death, that's a pretty big
But on death.
red flag. Yeah. It's like-
Right, and you have property. If you have
Right,
property
right.
fixed in the US, that's where you might have some issues. So I don't get these calls as much as I used to. I used to get these calls a lot. Maybe people aren't gambling right now in Vegas right now, but lottery winnings. The America, you're playing at the table, they take 30% right at source. They will take whatever your winnings are, 30% off the top.
Before you walk out of the.
Before
casino.
you walk out, you're netting, and they'll give you a tax slip too. So I used to get these calls and I still get them, but not to the extent I used to, because filing a US return means you have to get an I-10, which means you have to get a US number, you have to get a Canadian certified passport, you have to file a tax return. So unless that amount is very significant, plus Canada is the only country that can take losses against winnings, which means that you need to prove that you paid money to earn that money at the casino, yes. So ATM withdrawals can be part of that.
Wow.
So, but it really is true. 30% is the tax in the US on those lottery. Why I say taxable in US, Canada does not do that. So that's the difference. So if you have substantial winnings and you paid substantial and you invested a lot for those winnings, then it would make sense to do a return. But if not, it probably doesn't. Don't call me like $1,000 is sitting on the table. It's probably not worth going back
Right.
for, unless you're have a number and everything. Principal residents, people in Toronto owning a property they bought in 1975. It went up to $1.3 million. They're an American citizen in the US. They have an exemption of $250K. They could be taxed on their personal residence on their US tax return. This is something that is not taxable in Canada. It's the best. You say investment right now, I'm not sure, but anyways, we don't get taxed on personal residence, which is awesome. It's something obviously they're
haven't
always
come out yet.
discussing. That's right. They have not come out with that yet. So, and the other thing I discussed before, which is TFSA accounts not tax-free for US citizens, we include it on their US return, but it's not included on their Canadian return. Okay, any questions? Because that's US citizens residing in Canada. Any questions on that? Because I'm going to go into some more real estate for Canadians. If you have any questions,
Everyone seems.
everyone's good. They got it. They understand it all.
Yeah, they got it.
They got it. Okay.
They can do it themselves.
They
now.
can do it all themselves. So this causes, I say the word anxiety. I had a client last week came to me. They're like, we haven't slept after they left my office. We are going to sleep tonight. We haven't slept for a year because they had to, and I feel so bad. They had to file a US return. They've never had to do it. They sold a property in the US that they were gifted upon death, and they could not find anyone to file the return for them. So the US at certain thresholds of value, which if you have a property in the US, most people in this area buy in Florida, okay? All in the same area, they're all in Florida. The US at sometimes the broker will take 15% of the sales price. So if you had 100,000, they're taking $15,000 off the top of the sales. They're just taking that money. The IRS takes it. So it makes sense. And you have to, if you sell a property in the US, you have to do a tax return, but you will get some of that money back. Okay. It depends how much of capital gain you have, how much you will get back in, but in a lot of cases, you get all that back. However, as my last point says, that capital gain or loss is then reported on your Canadian return, which means you probably will pay Canada. Okay. Because Canada has higher tax rates. So if you have to file a US return and you're a Canadian, that means you probably don't have a social security number, which you don't because you're not an American. You have to get an I-10, which means you have to go to Passport Canada. A lot easier now. We're out of COVID, so it's a little bit easier to get an appointment. You get a certified passport, and then that's what I do. I file the 1040 NR return, and you get an I-10 assigned to you, which means you have an identification number with the US, and it's just a number because it's not a social security number. Every person that owns the property that's on the settlement sheet of the property has to file a tax return. So that's another point. Don't put a property in 5 people's names. Because the cost is every 5 people having to do a tax return. Another thing, if you just go buy a property, this was something in like the 80s, I think. I mean, I'm dating, but people used to put US properties under corporations and complicate them and think they were just saving themselves. And that means you have then a corporate return and then a personal, it just absolutely complicates. It is not necessary unless you're getting into the business of real estate in the US, then that would make sense, but not for one property that you're just going to buy. Okay, somebody's got a hand raised. Go ahead.
Mallory.
Hey, I just want to confirm, just so I'm like getting
Yep.
it all right. So I do own property in the US in New York State. So I only have to do all of this when I sell.
That's right. If you're
No.
not, well, I'm gonna go to the next slide. So
Okay.
if you rent it, do you rent it?
No.
Then no, you don't have to do anything.
Okay. Awesome.
Yeah, I think you have to report it on your Canadian return that you have foreign
Yeah.
property. Yeah, that's it. Yep, you're good.
Okay.
Yep.
Thanks.
So this is the other one, US real estate investment. This is what a lot of people do. They have Airbnb, or they have different property managers in the US manage properties. So Airbnb will take 30% if you don't tell them you're doing US return. It's a lot of money. It seems like 30%, that's not a lot, but it is a lot because that's not really the amount that will be on your taxes. You're not paying 30% on your rental income, okay? And in most cases with your deductions, you're actually probably not grossing very much. I'm not seeing a moneymaker in these investment properties in Florida. That's all I'm gonna say. Okay, there's very minimal, and that's just the ones I've seen. I'm just not seeing it. So June 15th is the deadline. Now, right now in my tax season, this is what I'm doing because these US property returns have to be done before their Canadian can get done. So the Canadian accountant has to know the numbers on their 1040 NR, which is their US real estate investment property in the US has to be filed first. Use those numbers to then file their Canadian return. Because these are Canadians, okay? These are Canadians owning US property. So, and yeah, and if anybody has any questions, but this is just you're filing a return because you have US income, okay? Obviously, it's really just there's a lot of just different acronyms, but I'm gonna even go into a little bit, and I thought this might be a little bit relevant to people in this area. Business travelers, okay? So you know when you go through CBSA, you go through the land border, or you go through Pearson Airport, they ask you, where are you going on pleasure, business?
Right.
And the biggest problem is if you're going down with a group from your work and everybody has a different story, you're done. You're done.
In the back room.
Yeah,
In
back
the back
room, and it's gonna be several hours later, you've missed your flight. You're done, right? Have the same story. Have the same story, okay? That's my advice to you. Whatever story that is, I'm not making up your story, but have the same story. So honestly, the Canadian US tax treaty is in your favor. If you have not earned over 10K, then you do not have any US tax. You're not exposed to any US tax. Also, you cannot be in the US, and this we'll go through a little bit later on even snowbirding. You cannot be in there though over 183 days, or then you're gonna have to file US returns, okay? So those are just 2 thresholds. I will tell you this, I was just at a course this week. Canada is not as lenient on this. Soon as you walk in Canada, if you're an American and walk in Canada, they want payroll taxes. And I find it from some of these people that, you know what, it's crazy. A lot of the big employers are just taking the risk that nobody will find out because it's extensive. It's very extensive for Americans to come up here and start working in Canada because they become exposed to possible payroll, and CRA will come after them, and there's big penalties for this stuff. So what I'm just talking about here is just Canadians going and working in the US. I will tell you, I've had a lot of calls and people are really misguided on this. Traveling nurses go work in the US. They have not cut ties with Canada. That means they're gonna file a return in the US. But if you have not cut ties with Canada and say you have a house here, you're still a resident, then you have to pay Canadian taxes. And I got clients that get big bills, not prepared, because the US does not tax as highly as Canada does. So they get a credit for what they paid to the US, but it's not high enough to cover the Canadian taxes. So be prepared, understand, unless you've cut ties with Canada and said, I am no longer coming back here, and there's a process to go through on that you are gonna get taxed in Canada. So prepare for that tax bill to come your way. I don't deal with that, but it's just people being aware. This is really just going through the real technicality of the treaty and how you're saying, you know what, if I go work in the US, because there's a lot of benefits to different organizations going down and working in the US. But I will say this too, you can work in Canada with the US and do it in Canada and be Canadian income, because you're not going down into the US. Once you start going to trade shows, signing contracts in the US, it becomes US income.
Money, right?
Yeah, so it's where in or with, remember that. If you're doing work in the US, it becomes US and work and US taxation. If you're doing the work in Canada for the US, then it's Canadian. So you just have to be very careful and understanding what you're doing, because trade shows is a big deal, contracting, and I'm telling you right now, people are able to track things, okay? I'm hearing right now, this is an interesting thing and has nothing to do with my slides, but I thought it was interesting this week because a lot of Americans, I will say I'm only dealing today with federal taxation, because when you go into states, New York is a bad one, California is a really bad one for taxation, okay? Those are two bad states, similar to how bad Canada is. So as in high taxation,
Right.
they will come after you. If you are working in New York and you say, no, I'm not there, they are going to track you. There's tracking devices on people's computers. Organizations, when the employee says, I'm working in Florida, but really they're in New York. New York is saying, I want that income.
Right.
Okay, they're because the US doesn't have the same where they transfer payments to the states have to come up with their own money. So they are very, like, there's ways that they're gonna do it, and they're gonna do it that way. And honestly, New York and California are the hardest, and we're right near New York. So we have a lot of people that go across there. So you just have to be very aware that there's all these laws. I am just dealing with federal. States have jurisdiction too if you start working in the US. So, any questions?
In or with, I like.
And
that.
or with, you gotta remember, yeah,
That's
exactly.
got a t-shirt.
Right. T-shirt, I love it. So no questions, everybody's good? You guys are learning, you guys are getting it like, oh my gosh.
They're
like-
writing it down panically.
Okay, yeah, exactly. Or they're like, I don't understand a word this lady's saying. So yeah, so this is kind of blocks, but that's fine. I can see it. Compensation, I just went through this, where services performed. Okay, so where you're in New York State, New York's gonna try and tax you. And if you're more than 10K federally, the US is gonna tax you as well. Okay, there's a lot of people that go down to the US, go to school, doctors, all kinds of things like that, right? I get them all the time. They went down to the US and they got bursaries, that's income. They have to then file a 1040 NR return, claim that credit in Canada for that, okay? Interest is 0%, dividends is 15%, rents, as I said, and then we can file, if we say we're filing a return, it will be on your tax return, it will not be 30%. But if you don't tell them you're filing a return with your Airbnb company or whoever's taking the rental income from your US, let's just say Florida property, then it could be 30% they take. You're gonna get that back on your return, but it could be upfront. Big one, the biggest one of income for Canadians, the people I deal with, is pensions, okay? The Canadian went down, spent 10 years in the US, had a 401k, and they left it down there. You do need to be I'm telling you how many calls I get on this is extensive, okay? So a lot of investment advisors will not allow you to keep your money in the US under their brokerage if you have a Canadian address. I just found out Schwab will take your money with a Canadian address. Or you can roll it to an IRA and take it out in annuity payments. Do not, I say again, do not. I got people, you don't know how many calls, I turn my phone off because it rings. So people cash out, they are Canadian, they worked in the US, they have a 401k and an IRA, two different things. 401k is just like a company, sound like an RSP, okay, just RSP account. They have 500,000, they cash it out. The US takes 15%. Canada will take graduated tax rates on that. It's huge, huge taxation.
Such a loss.
It's a loss of your income. And when I hear that, I'm very sad.
Yeah.
So take it out in annuity payments. Take it out over time. Do not, and a lot of times, and I don't want to be, a lot of times investment advisors find out, oh, this person has $1 million sitting in the US. I want to take and invest that money. And they will do things that sometimes you just got to be very aware if you have a lot of money sitting down there. Make sure, roll it to an IRA, take it out over time, or if you can get it up to Canada in a way, but you need to get advisement on that so you don't lose your money in
Sounds like
taxation.
you need professional.
You need professional, right?
And
yes.
one-on-one too,
Yeah.
because every situation's
Every
different.
situation is different. And a lot of advisors, a lot of the people, and we talked about this week in our thing, a lot of people have only 100,000 sitting down there. So it's not a big amount,
Still 100.
but it's still money, right? So you need to make sure you have a good advisement on how to deal with that. Social Security. Okay. So I'll give you the example. Social Security is only taxable, and this is the Canadian US tax treaty, in the country you reside. So the Americans that have Social Security, it's not taxable in the US. It's only taxable in Canada. If you are Canadian, and you have CPP and OAS, and you cut ties with Canada and move to Florida for the rest of your life, you pay taxes on OAS and CPP only in the US. It is a totalization agreement for residence-based taxation on Social Security. So CPP, OAS, Social Security, only taxable in the country you reside in.
It
Okay.
doesn't follow you around like the other.
It doesn't follow you around like everything else, like how it ties to
Right,
different
right.
countries. So does anybody have any questions on any of this?
I think their
They're
eyes
good?
are open. Yeah.
I don't know. So I'm gonna go, okay, so yes, this is something I get calls on. These are this is a snowbird
Okay.
slide.
Let's talk about snowbirds.
Snowbird, so you know what, the perfect days in the US is probably 122, but 183. So there's a computation, and I will not charge people to fill out the closer connection form that the IRS has. Guess what? They get together in the Florida, communes that they have, and they can fill them out. It's just their name, address, and how many days they're in the US. This is just making sure that you're not getting pulled into the US tax system. Honestly, you should do it if you're there over 150 days or so, or even 120. You should do this form if you're snowbirding. Okay. Just to ensure, it's just keeping it above board. This is how many days, and they're getting better. And you know that because they're scanning your passport.
Right.
Everything's electronic. Every time you're going in and out of the US, it is tagged. They know. Okay. And we know with technology, it's very easy for them to do this. So you should do a closer connection form, an IRS form, very easy one pager that you do that says how many days. And it just means that if you're a Canadian, you're not getting exposed to any US tax. But literally fill this out yourself. This is not something you need to pay someone to do. So you just don't want to be considered a US tax person, but literally it has a computation. So it's all the days in the current year. It goes back 3 years. And why I say that, once you do rolling years, really the perfect number to stay in the US is 122 days, but it's by year, right? So current year. So it's by calendar year. I mean, when you do that. So, but yeah, any questions on that? All good.
It sounds, well, it protects you.
It just
and-
protects you.
Yeah,
It's
yeah.
just a protection. And honestly, they're probably not gonna pull
like
you
a
into the
paper trail.
system. I'm
The
not gonna.
CYA,
right.
right? The CYA.
I
paper
got
trail.
this to cover me.
Yeah.
And honestly, they fill them out in the trailer parks. You know what I mean? I'm like, they all should just get together, fill it out,
Yeah.
send them in.
Alright.
You know what I mean? So, yeah, that's almost like I've gone through super fast. But does anyone have any questions on any part of what we've covered on either US citizen taxation, non-resident taxation? Go at it. This is your time.
Stephanie's here.
Yeah,
We don't even see you, so.
I know we can't see anyone.
Yeah, so if
It's
you're-
like talking to
If
it.
you're shy, we'll just hear your voice. You can be in your pajamas, it's okay.
Exactly.
Hey, Jennifer's gonna talk to us maybe.
Hi, Stephanie. It's Jane
Hello.
LaPointe in Kingston. How are you doing?
Hi, good. Yeah, she's coming.
Good. It was great. We loved the pace. It kept us all paying attention. So-
I know, I don't wanna, my daughter was like last night, she's like, Mom, go through it with me. She goes, you gotta talk slower. And I'm like, oh my God, this is tax information, Abby.
Yeah, no, it was great. And my key question, but you really did answer it, was about the TFSAs. It's always the question that our clients ask us because some say yes and some say no. And so I like the way that you put it, just that it depends. Sometimes
You know
it's-
what? This is a big, and I literally went big banks and the big firms were doing trust work on this, on TFSA. So 3520, 3528s, these get audited very substantially. Those forms, they go to a different service center. Most agreement right now is we are not doing trust on TFSA. It doesn't fit what a trust is. And yeah, we include the income and everybody agrees with that. The deal is that you have to, if you're using foreign tax credits, you could have enough credits from different income to cover you to some degree. I just had a client come to me yesterday. She's never filed for 12 years and this is the trigger, okay? Somebody is giving me money from the US. They are not going to release any of the funds until they know I'm filing a return. I'm serious. Like these are a lot of the triggers is inheritance money. Americans, oh, I didn't file. They will not give her the money till they have confirmation she's going to file a US return. This is an American that should have been filing, okay?
Yeah.
So she has to do that. But the deal is that you just definitely want to be aware that you might have to pay in the US, but honestly, it might make sense
Yeah.
because of the Canadian tax savings. Like it's a huge savings in Canada, right?
Yeah.
So if you pay a little bit to the US, it might have overall, it probably made financial sense.
That's great. Thanks.
Yeah.
And then my only other question is just with the US, Canadians owning US real estate, and you talk about the $60,000 value. And did you say ideally you transfer just prior to death, or a transfer can happen at death?
No, I would transfer it before the estate goes into probate. So before death, transfer deed, and they're saying this is the way to deal with all of it. Like in
Yeah.
most states, you're good, and Florida is good. Florida's easy, honestly. That's the good thing. Florida and Texas have no state taxes. And I think that's why even like Arizona has a state tax. So when you own a property in Arizona, you're paying federal tax and state tax. But don't forget, I mean, everybody needs to be aware. I have an email today. Oh, do you think I can take moving expenses, my son's moving expenses, like extra expenses on their US return, but they're still doing a Canadian return. So in reality, they're just going to pay more to Canada.
Right,
So they're
right.
going to get a credit. So it's not a win-win. So, but it is a lot easier to deal in Florida, Texas, like these states that have no state tax, to be honest with you. There's a lot of
Right.
Eastern Seaboard tax. They have like Vermont, like some of these states have no money, okay? Pennsylvania, extremely come after you too. So there's just different states that are kind of better. And literally most of my clients, they're owning in Florida, okay? That's where they're buying their property. And insurance is becoming prohibitive. There is, I'm telling you right now, they're cash flowing it sometimes, but they're not making money, right? And that's what, that's just the case.
They don't have the administrative to find the money.
Right, well, the
Change the
money's
money
not
or-
there because
yeah.
there's very heavy insurance,
Ah.
HOA fees on these condos, so but it depends, you wanna own a property in Florida, that's up to you, it's just, there's not, and like in Canada, they don't have the capital gain like Canada properties have had. You know, I'm not gonna say that right now because we don't know where we're gonna go up or down.
Yeah.
But I'm saying just in general. So yeah, and the other big one honestly is 401ks, IRAs. and how people move. That is one of the biggest mistakes that happens because it's very common for a Canadian to work in the US and have a 401k and IRA and get very bad advice. And there's ways to move an IRA or a 401k to an RSP, but it's very difficult. And I've seen people not be able to do it well because it's not a rollover. You got to cash, you got to pay the tax to the US first. You have to have that money up front and then move it into RSP. That's not an easy transaction. So it is better to obviously find there is people in Toronto that are licensed in both countries. They're cross-border investment advisors, but they are people that sometimes want they want $1 million just to start. So some of the people that have 100,000, they can't do that. So they need to, over time, move the money up to Canada through, annuity type payments, but they have to be over 59.5, or they end up having another 10% penalty.
Wow.
So and people right now, some of them are desperate. I've had people call me and go, I got to do it. I said, you're going to get hit with like a penalty tax on top of a tax. And they're like, yeah, but this environment economically, I have to do it. I need the money right now.
Oh.
So it's sad. Yeah, exactly. Cause you're gonna,
Part of your
lose a
legacy.
lot of
Yeah.
money, right? And to taxation. So, yeah. Any other questions?
Hi, Shandy here. Thank you. That was great. Just have a couple of questions. Stephanie, where's your office located?
In Belleville.
In Belleville. Awesome. So your contact information, I was just wondering about that.
Okay.
And yeah, how long have you been doing this then? It sounds like you've got quite a
Long
bit of
time.
experience.
Oh my gosh. I've been doing it. I started in 2002 when I moved up here, but literally since 2009, it's been my business has massively grown because there is not a lot of people in this area. I mean, I can do taxes for anyone in Canada, but in this area between here and Toronto, not a ton of US tax compliance cross-border.
Right.
Yeah.
Yeah. Well, thank you so much for doing this. It was very, very educational and I appreciate it.
Okay, I tried to go fast because some of it's irrelevant to some people, but I don't want to go too fast.
No, I thought it was good.
Okay, good.
Thank you.
Yeah, so you can just reach out at stateside.tax.com and then my contact information is on there.
Okay.
I'll send it in.
Okay, that's
in the
perfect. She'll
email
send it.
also.
Okay, perfect. She'll send it, then you have it on email.
Thank you.
Well, I guess I'm gonna stop the recording and let Stephanie answer her phone. She's got stuff to do. Thank you so much for being here and we'll see you again. And have a great spring whenever she decides to pop in. Thanks a lot, people. Bye-bye now.
Thank you. Thanks,
Thank you.
Stephanie.